Good morning, Chris. Thank you for joining me today for our usual investment roundup for the month. How are you keeping?
Yeah, very well, thanks. It's nice to be in September. Schools are going back, new lives and everything else. But yeah, it's been actually a pretty good. I mean, it's been a fantastic year to date. Thank goodness. In terms of improvement of against the sad COVID vaccine and everything, but also improvement in terms of markets have been great. The weather's been okay this summer. But yes, we've still got 4 months of the year to go. Lots of decisions and thoughts to be made, but I think it looks okay.
Excellent. I know we had our investment committee yesterday, and one of the things we touched on was looking towards the end of the year. Do we need to start thinking about making tactical changes going into 2022? Just on that subject quickly, what do you think are some of the main changes that we might want to consider going into 2022 when we have our next investment committee?
I think that the key one is going to be not just is the economy continuing to improve, because I think it is going to. We are fortunately still only 8 or 9 months into this COVID-19 challenge recovery, and the rise of vaccinations is still a positive. We're still going to be growing. The big issue, I think, is going to be, do we have a serious inflation problem or not? I think that's a very big debate. And we've obviously benefited in a number of ways from certain prices going up. House prices have gone up. That's fantastic for most people. But general inflation, the fact that everything is starting to edge up a little bit, that's going to be a big debate. Because let's face it, we've got very, very low interest rates at the moment. Bank of England's been doing very little apart from stimulating the economy. Are they going to have to change that? And what that will sort of implies is that things such as the bond markets might start to have a little bit of pressure. You might see higher bond yields, and that also inevitably impacts equities as well to some extent. So certainly these are big things to think about. Is it an absolute disaster? Absolutely not. A disaster would be a huge COVID-19 challenge, but I think we're moving fortunately away from that. I think far bigger is going to be, are we going to get an inflation issue or not? And my feeling is there is building inflationary issues out there, and we are going to therefore see at some point in 2022 the Bank of England making a change and actually, I would say, increasing interest rates slightly, only slightly, but it will be a bit of a change from what we've seen in recent years.
Yeah, no, absolutely. Because I think for a number of years now, we've been used to low mortgage rates, haven't we? And that's been a cost, actually, that's not taken up such a big part of our wages. But clearly, a rise in interest rates and anyone with a tracker rate or on a standard variable rate might start feeling that bite slightly.
That's right. And it is slight. It won't be material, but it makes people think and realize that, oh my goodness, house prices will not always go up to the extent that we've seen over the last year or so. There'll be a few other small challenges out there. But as I said, you've got to take into account of a world which is still getting bigger and better and stronger. So the overall combined approach is still okay. And for investors, for people with a number of years looking forward, ahead of their retirements or looking to build monies for future plans and related, it's still a good time to be invested. It's not a disaster or a problem. There's always challenges out there, but 2022 looks okay. 2021 has been fantastic so far, and my guess is it's going to be okay for the rest of this year.
Great. Excellent. Thanks, Chris. The other thing I wanted to touch on then that was brought out on our investment committee, and it came as a surprise to all of us really, about emerging markets and how that has not performed as well as what we thought it was going to be. Any sort of comments to add on that area?
Yeah, it's been emerging markets, which obviously refers primarily to China and India and South America, and I guess Africa, other parts of the world which are still growing. Most of us think that these are very exciting areas to invest into. And let's face it, over many, many years, they have done an awful lot better. The rise of China or India has been a fantastic thing to watch. The thing is, markets have been difficult here, particularly year to date. And there have been some changes in China. The Chinese government have made a few evolutions to their policy. But in terms of the rise of the power of the emerging markets, it still is likely to continue over not just this year or next year, but over the 2020s. And that's what personally excites me. The reality is, in what we call the developed world, which would be the UK or the States or Europe or Japan, we've had some marvelous moves of wealth, of house prices, of everything else over the last 30 or 40 years. It's been a fantastic time to be an investor. some of those big themes, the sort of the rising growth of the consumer sector and related, these are themes that are only still sort of partially done in places such as China or India. And my guess is over the next 10 or 20 years, these will be big themes. Now, what's exciting is that all of the companies that you know day to day, even big UK companies or European companies, they have very global exposures. So, you know, that's exciting news even for boring old FTSE 100 investors. So I'm thinking that emerging markets are going to ultimately have a very good 2020s. That's an exciting theme to be exposed to as an investor. And the thing is, you don't have to buy Chinese stocks or Indian stocks alone. You can still buy some UK investments or European and even occasionally American investments, which still have that global exposure. So this is a time to be thoughtful as an investor, an area which I think will be of interest for the 2020s, and one which we may have a little bit more of an opportunistic view towards over the next few months.
Excellent. Thanks, Chris. I think I'll just wrap up saying that we never, as financial advisors or investment managers, expect a straight line in performance, do we? It's always having that longer term view and understanding that there will be fluctuations. Money can go down as well as up. But as long as you've got maybe the long term objectives right, then hopefully things move towards where you want it to over the longer term. So excellent. Thanks, Chris.
No problem. There's always uncertainty out there, but always good reasons to be optimistic too. So be it ups or downs, there's always exciting things to talk about. It's always a pleasure to talk to everyone.
Excellent. Glass half full, eh, Chris?
Glass is always half full.
Brilliant. Thank you very much, and look forward to having a catch up next month.
See you then.